Hey guys, what's up? It is Dave with Built by Trading. I am doing a new series where I go over the quarterly earnings report during earnings season. So we had Netflix and Tesla this past week. So let's get down to it. First, we'll get to Netflix, basically the financial highlights. I have a table for you here. I'm not going to read off all of these numbers. I'd say the important things to look at here is a year over year change, quarter to quarter. We have a 17% increase revenue wise, operating income 12%, 8% net income. And then diluted EPS, it was a miss due to the $619 million tax from 2022 to 2025 from Brazil, but we'll go over that shortly. Also down here, you can pause the screen, look at the balance sheet snapshot, the cash equivalents, total assets, long-term debt, shareholders' equity, and then also cash flow highlights from quarter three down here. Operating cash flow at 2.83 billion, and then free cash flows at 2.66 billion. Moving on, we'll go financial statement notes here. Revenue recognition. So basically memberships, they continue to drive the growth. Their ads did really well with 35% increase quarter over quarter, and that is kind of expected to continue to increase into the end of the year and into 2026. This is the 619 million Brazilian non-income tax from 2022 to 2025. Luckily, it's not a long-term thing, so it should not hit. It's not a thing that's going to hit constantly. Otherwise, you can see that stock based compensations, they're kind of embedded. It's a way that they are attempting to retain talent. So that does dilute EPS slightly. So keep that in mind. Otherwise, we have content obligations of 20.9 billion. So we have to watch for rising costs in live events, specifically with the WWE and the NFL. Moving on, management insights. So again, revenue, they basically said they were in line. Their margins were impacted by that big tax. But otherwise, the underlying business is still healthy. They're still getting subscriptions. They're still trying to get into the gaming aspect, gaming realm of their business. So there's a bunch of growth to be still had. On ads as well. You can see the ads are looking forward to double in quarter four. So estimated revenues is just quarter four is 11.96 billion. Fiscal year 2025 up 16% estimated, right? And so really when it comes to risks competition wise, I'm not really sure if Netflix really has competition. I mean, you could always say Disney Plus or Hulu or Peacock or anything like that. But when it comes to other stocks that are within the market, they're kind of within their own realm. Let's move on to Tesla. We'll hit the financial key highlights first. So again, I have a table here, metrics off to the side, quarter three 2025, quarter three 2024, year over year change. So we have a 12% beat estimate. Operating income, that is down significantly because of AI investments. We'll go over that shortly. Net income, so that was down 37% too. So it's basically a 37% missed on the estimates. Again, balance sheet snapshot, total assets 133.74 billion. Total debt is 7.7 billion, which is lower than average, which is nice. Shareholders' equities is here. Operating cash flow is sitting at 6.2 billion, and free cash flow is sitting at 9.5 billion year to date, but 3.99 billion for the quarter. Financial statement notes. So it's kind of broken up into three sections. We have automotive, which was deliveries were up 6%. That's how I understood it. Energy was up 44%. So that is the Powerwall and the I'm blanking. I'm skipping on the name right now. But the other thing for big business investors, for big businesses. Services. So this is like insurance. This is like bringing in your car for maintenance. I'm pretty sure used car sales also got underneath this. So that was up 25%. We do have to be mindful about regulatory credits. That was down about 44%, but we kind of knew that, it wasn't going to get the governmental stipends and whatnot with this administration. So I don't think that's anything new. It's just hitting now. Otherwise, this operating expenses, this is where it came in from earlier, $1.63 billion. That's super AI focused. So I'm pretty sure a lot of it's going to NVIDIA buying their chips, focusing on AI infrastructure, and also with their robot series coming up as well. We have some restructuring as well, which is laying in some costs as well. Otherwise, we have digital assets at $1.3 billion in holdings. So naturally, having crypto exposure, it's going to add volatility. And there's the capex again, $9 billion fiscal year, which is rising on the 2026 for the Optimus, right? AI and Optimus, for their growth. But that's what they're really forward looking, is AI and Optimus, in that realm. So again, results deliveries were up 7%. Energy deployments was up 81%. Margins were down due to tariffs. What things we have looking forward to is the unsupervised FSD at year end. I'm pretty sure it was in Texas, that it was coming out in. Otherwise, we have Cybercab to look forward to in quarter 2 of next year. We have Optimus, we have semis to look forward to. So there's a lot of growth prospects within Tesla itself. Otherwise, we have, right, risks, tariffs, which are already being hit. Tesla's already being hit by them. FSD approvals, so that's regulatory things. Supply chain, maybe the minerals with China, but they just put out a deal today, so maybe it won't be hit. We'll see about that. And then execution, depending on AI. We'll see how that is actually executed. So there's a pretty good high risk reward for investors, specifically in the growth realm. Let's move on to the actual charts itself. Okay, I am set up on the weekly view in Netflix here. We actually have a sushi roll on the weekly, meaning the high of this week took out the highs of the prior 5 weeks. 1, 2, 3, 4, 5. And the low of this week also took out the low of the prior 5 weeks, right? And so this is completely engulfing the prior 5 weeks. Now, where does it go from here? Most of the time, it depends on where price breaks from here. So if it breaks lower, it's most likely continuing lower. If it breaks higher, it's most likely continuing higher. Now, there's also the potential for chop here. If we look at the daily, which a lot of people are familiar with, you can see that I have the support level here. It held these two and it broke down on the gap down on earnings. It has done nothing but sell off since earnings, even after a 10% drop. And it is now closing underneath the 200 EMA and then also underneath this potential support area here. So I don't know if we get a snapback trade where like it bounces. It takes a lot of practice and some specific criteria to hit. But what I would be looking for in order to catch a bounce, and also it would be a quick trade, would be it has to be above this blue square here, this blue rectangle. If it's not, I'm not touching it. Otherwise, we have a lot of potential supply above. Also, looking at the EMAs, they're kind of jackknifing straight down now, especially the short term. The 200 is right here, but overall, I'm not super interested in trading this. Maybe for a bounce play, I don't know. It could. I really have a hard time seeing this actually breaking the low, coming back, retesting, and starting a downtrend, especially with how strong this general market is, and with the market gapping up 0.8% as we speak. So I'm not super interested in shorting this. However, after this earnings, it might be out of play for a little bit because it could just chop around here and just continue to base in this no man's land. So until something changes, structurally, more fundamentally with Netflix, I'm not super interested in short term trading this. Now, investment wise, this could be a nice dip buy potential, right? But you have to know your time frame and you have to know your plan and what you're trying to do. Let's go to Tesla. Tesla, looking at the weekly on Tesla, you can see it's just kind of chopping from side to side here. It's just chopping in a zone, right? Let's look at the daily. We have a nice rounding bottom here. We have a nice, this gap down, tried to sell off on earnings, then it did nothing but get bought up, and it had about 8.5% move or so from low to high on earnings day. Then Friday we get a little bit of selling. We shouldn't be surprised to that, right? However, I do think it's trying to base here, and I am looking for it basically to break out. What I will be looking for, I'm not really interested in any longs unless it is over 456.81. We might get that with the gap up. I don't know what price is at this point in time, but tomorrow, Monday, Tesla could be actionable. And I have the high right here. If you want to zoom out, let's just go to the monthly so we can see it all. There's the high, 488.54. I think we're only like 12% away from it. So we're not that far from, which is pretty wild. So I'm a long-term investor in Tesla. I have a position from lower, but short-term trading, I'm not in this at the moment, but I am looking for an entry this week. I hope these help. These earnings videos, they are meant to be short. They're meant to be informative. So if I can provide any better information, different information that you think would be more valuable, please do so. Otherwise, I'll keep these things coming out. Like, subscribe, share, prepare your plan, and execute. Good luck this week and stay prepared. Later.